Welcome back to CNBC. We appreciate you joining us today on a big market day. You know, their story from you and other CEOs has been that this travel rebound has been extremely strong, yet the market seems to be a bit more discerning, right? Are investors wrong to question whether this rebound in travel can last?
Yeah, I mean, we haven't seen any signs. I've heard you talking about inflation and the Fed issues, but we haven't seen any signs of consumers being impacted in terms of travel spend. We all know there was lots of pent-up savings and underspend during COVID on services and travel, et cetera. And we've been anticipating, and so far it seems to be bearing out that people are interested in spending, and if anything, spending more on services as opposed to goods and things they were buying during COVID.
What is your response to the stock performance we've seen today? Your stock is down today and this week. You announced a number of new products today, earnings on Monday, where the results were good, but you also indicated that costs were going up.
Yeah, I mean, we've said for a long time that our fixed cost base, when we took a lot of costs out during COVID, that, you know, there are things like wage inflation going on. We are investing in certain opportunities where we think there's growth, and we're bringing in great people to drive that. But that's not really news. I think, from our perspective, the product innovations we're doing, the work we're doing on traveler success, and sort of changing the future of product engagement with our price prediction products and other things, is a real step in innovation. And on the B2B side, which we talked a lot about yesterday at our conference, we have great opportunities as we rebuild our platform to power many more partners in lots of new ways. So we think there's a terrific opportunity to keep expanding both of those things and help build the ecosystem.
Okay. You hope that these product enhancements will drive bookings. On the topic of inflation, we've seen hotel rates, Peter, jump around 40% compared to the same time a year ago. A lot of questions around whether this is sustainable. On the call, you did reference that we could start to see travelers opt for cheaper alternative vacations. Are you starting to see that now? When do you expect that to show up?
Yeah, we haven't seen that so far. What we call ADRs, rates have been very strong through COVID, particularly in the middle and upper end of the markets. It is a little bit geographically based, so cities have been less strong on the ADR front, where some of the luxury and resort markets have been stronger, that we've talked about for quarter after quarter. Beach vacations, mountains, things like that. But cities are now catching up, and city ADRs are growing as well. So there appears to be sustainable growth in rate, and the market seems to have absorbed it. My point on earnings was that if we do see inflation impact on travelers, we don't think it reduces travel. We think, if anything, perhaps travelers take a little bit off what their ambition is of where they were going or what they were staying in, but they're still going to travel.
Hey, Peter, it's Deirdre. So you're not seeing inflation affect the product yet, and you're also not seeing a slowdown in terms of that travel rebound. But I wonder, given the Fed's commentary about the economy and a potential slowdown, do you start preparing for what some softness could look like? What would that mean?
Sure. I mean, we obviously, like every company, we think about what it could mean as travelers make adjustments. But as I mentioned, unlike some of the earlier guests you had, and whether people are cutting off streaming services, et cetera, we think the pent-up demand in travel will continue to drive travel demand. So for us, it's really about helping customers find the right thing at the right price for them. We spent a lot of time yesterday talking about how price has been really the predominant driver in travel shopping online for a long time. And we're trying to make sure we're matching customers with the right product so that they have great outcomes and keep traveling. So we think that flywheel keeps going for the foreseeable future. Obviously, if we have a major economic meltdown that some of you are talking about from time to time, things could slow over time. So this isn't a prognostication forever if we end up in a highly inflationary period where people are cutting spending on everything. But for the foreseeable future, there does not appear to be an impact.